Hi there, welcome to GrainTV. It's Wednesday, July 27th, a mixed day in the markets. Let's take a look at GrainEdge's trading platform and see where we closed. In Chicago, corn gained 3 cents a bushel. Soybeans, front month August, about ready to go into first notice day, up 16 3/4. And wheat in Chicago, while in positive territory for much of the day, closed fractionally lower. News today was pretty limited. There was some results out of the spring wheat tour in North Dakota. This is now day 2 of the wheat tour, and on day 1, the yields in the eastern part of North Dakota turned out to be better than normal, better than the average. Excuse me, they were actually worse than normal and worse than last year. Last year, day 1 tour results were around 51 bushels to the acre. This year they're projecting eastern North Dakota to be 43 bushels to the acre. On the other hand, today's results tentatively for day 2 are suggesting that the central and western parts of the state will be in better shape than last year, so probably balancing out overall a fairly decent crop in spring wheat country. Other news out, there was some USDA export sales to talk about this morning. Flash sales of 131,000 metric tons for soybeans and 247,000 metric tons of corn. Both of those deals were split almost equally between old and new crop deliveries. So that was somewhat supportive, giving us a little bit of stimulus here going into the morning trade session. Excuse me. Other news out today, there was EIA ethanol numbers. We'll get to those in a second. But first, let's talk about the crude oil numbers that came out, which everyone has sort of been pondering because we've been in a sort of downward spiral here after we reached about $51 a barrel on crude, now trading around $42 a barrel. And today's EIA crude stocks number was shockingly bearish, if you will, because it came in 2.2 million barrels higher, 1.6 million barrels higher than last week, while traders had been looking for a 2.2 million barrel drop in crude stocks. So that was a very negative input. In addition, the ongoing struggle in the gasoline market, we saw gasoline stocks rally over last week, up 400,000 barrels from last week. Traders have been looking for almost an unchanged number in gasoline stocks. So overall, crude continues to sink on the weight of growing inventories, and especially in refined products like gasoline, when we expect during the key driving season for gasoline inventories to be shrinking, they have been growing. So that in general has been putting a negative input on crude and broadly in all of commodities as well. Let's take a look at EIA's ethanol report. This report was somewhat mixed. There was some good news in terms of stocks going down. That gave a little bit of a stimulus to the ethanol futures market. Production was off 31,000 barrels from last week, but overall, ethanol production, or at least corn use going into ethanol production, should probably be a little bit stronger than what USDA has factored in. We're doing better than we were last year, and so we're expecting a slight revision higher in ethanol use, or corn use for ethanol, in the final USDA numbers that come out. Let's switch gears and talk about soybeans. We had a nice rally in beans here. We didn't necessarily hold all of the gains that we had accomplished in the middle of the session, but we were at least in firmly positive territory. Let's take a look at the November soybean chart from GrainEdge's trading platform. This is a 1-hour candlestick chart. You can see we've been in a solid downtrend line for the better part of 3 sessions until yesterday, sort of breaking through that. And today we did punch higher. Overall, we were looking sort of at the recent high here at 995. We backed off of that mid-session and closed below that 995. But if you're looking for more short covering, that is probably the next target we need to take out to get us some more short covering rally here. After that, obviously $10 the critical mark to punch through on November beans. But overall, there's very little to sort of hang our hats on a major recovery here in beans. Anything is probably short term in terms of the rally and correction at this juncture, in light of very, very positive production potential in the U.S. market this coming fall. So that's all we've got today on GrainTV. Tomorrow we'll be talking about the weekly export sales numbers. As always, if you have any questions or want to learn more about our trading services, visit us online at grainhedge.com.